So the Reserve Bank of India will pay 2.69 lakh crore rupees as dividend to the central government. While this is a record high, it's still lower than what was being anticipated with.
Reserve Bank of India has finally announced a record dividend of 2.69 lakh crore to the government.
So you heard it right. RBI pays a record dividend to government from its income. So today let us talk about something really important, how the Reserve Bank of India or RBI actually earns income. You may have heard of RBI as a bank that prints our currency and controls inflation. But did you know it also makes profits every year? Let us understand how it works in simple language. Now remember, RBI is not like any other regular bank. It does not give home loan or open savings bank account for us. Instead, it works behind the scenes to manage India's money and economy. But still, it earns thousands of crores every year. So how does it do that? So let us break it down. First, RBI earns interest from government bonds or securities. The government borrows money by issuing bonds and RBI buys them. These bonds pay interest regularly and that becomes income for the Reserve Bank of India. So just like you earn interest from an FD, RBI earns from these bonds. So this is like a big and steady source of income for Reserve Bank of India. Before proceeding further, I request the viewers to subscribe Learn by Choice for more videos on financial literacy, NPS and self-empowerment. Thank you for doing it. Now let us go back to the subject of our discussion. Second, RBI manages India's foreign exchange reserves. It holds dollars, euros and gold, which earns interest or gains when the prices goes up. It also earns by selling and buying foreign currencies to keep the Indian rupee stable. Recently, RBI increased its gold reserves and gold prices went up. Profit again for Reserve Bank of India. So foreign exchange and gold are like RBI's investment portfolio. Third, RBI earns from open market operations and lending to banks. It buys and sells bonds in the market which earns profits during the price changes. And it also gives short-term loans to the banks at a fixed interest rate which is called repo rate. So banks pay interest on that which goes to the Reserve Bank of India. These tools actually help RBI to manage liquidity which also earns income for the Reserve Bank of India. Another smart way RBI earns income is from the currency printing or seigniorage. It costs only a few rupees to print rupees 500 rupees note, but it has a face value of rupees 500. So the difference between the face value and the cost of printing is its profit. This is called seigniorage and it's quite significant for the RBI's income. Of course, RBI also earns fees by providing services to the banks and government. All this together makes up this yearly surplus for the Reserve Bank of India so as to transfer dividend to government. Now what happens to this profit? So you may ask me, does RBI keep it all the money? No. After keeping some money aside for safety, which is called contingency risk buffer, RBI gives the rest of the surplus to the central government. This is called dividend or surplus transfers. In 2025, RBI has given a record amount of 2.69 lakh crore to the central government. This amount from RBI helps the government to reduce its borrowing, to fund welfare schemes or invest in development. So the RBI not only manages the money but also supports the country's finances directly. Thank you for watching Learn by Choice. Please subscribe to the channel for more videos.